Traders, Anthony here, having a quick look at the US 100, right? So this is under pressure, as you can see, with this significant bearish candle. Now, what's happened here is we've actually attacked liquidity under this previous daily low liquidity pool. So be careful here. I would expect this possibly to retrace up, but I'm thinking we'll see some more downside this week. Right now, it's Monday, and quite often you're going to see, just go down to the 4-hour chart and have a look at it. Early in the week, it's most likely that this is going to take out liquidity prior to the trend for the week, right? So if this is going to be a bearish week, for example, it wouldn't surprise me we see it trade back up here and then we get our trade. So, I mean, Monday's fairly early. I don't like to get too involved on Mondays. And, you know, I mean, a couple of things with this. We've traded down into this level here. And on the daily chart, you can see it's a big level on the daily. Now, if we were to grab a Fibonacci, pull it from this high down, it wouldn't surprise me we see something like that. And maybe we get our trade. So just be careful. I wouldn't be shorting it at this level. And I wouldn't like to counter trend trade it, to be honest. But a move back up into the 61.8, even to the 50% here to 61.8, this yellow zone, could get me very interested in this. So I'll mark up this candle here as a point of interest. And I'm thinking that if we see a pullback, yeah, like, I mean, there's no real trend here. There's nothing, we don't see much history here. Like this, for example, that's a nice trend, right? Over here, what do we got? Yeah, okay, so it's a little bit dodgy. But in saying that, given this move here and this break of this low, all right, we've got this break, we've got an imbalance, we've got this, in fact, up here, this is the balance area that it's traded from. So we'll just mark that up and then we'll have a look at a potential entry point. So we've got a 4H balance area up around here. We've got this imbalance, in other words, this red, thin red candle where there's nothing left and right. So we'll just mark that up and call it an imbalance, 4-hour. It would make sense to me, and again, if we grab the Fibonacci from here on the 4-hour time frame, see the 61.8 to 786 on this time frame? That would be an entry point for me. So if this happens to trade back up, I would be looking for a short in around here. By the way, guys, make sure you click the link below and jump on board our Telegram, free Telegram group. Have a look at my website as well. And we've got lots of exciting things going on. So short position, I would be inclined to look for an entry point somewhere in here. Where do you go with that? Go for broke with your risk reward, of course. I'm hoping we get a red week out of it, because, I mean, I like this move. This is significant. Then possibly Monday it pulls back up, takes out liquidity in here. In other words, there's a lot of retail traders shorting this. It takes out stops, and, you know, then we get a red week out of it. That's the plan of attack. So I think I won't be touching this unless it trades back up into, look, I mean, I wouldn't even mind dropping that down a little bit. I want my stop loss above this previous high. That's a very wide, it's a wide range, this stop loss from the entry point. Look, my entry point is going to be this entire range here, this imbalance, right, from the high to the low. That would be, let's put it this way, I would be inclined to set up, let me mark that up and I'll show you what I'm talking about. Work out your position size, and this is going to be a sell zone. And I would be inclined to set up pending sell orders through here, right through from this low, even a bit lower, just to get your feet wet. That's going to be my sell zone through here. work out your position size, and I would go in with a very small position here, and then layer in a few more up the top, pending sell orders, limit orders, right, short. And your overall, however many of those you open or that you have sitting in there, that's your position size, all up. So work out your risk, what you're willing to risk, and I would be spreading it. This is not financial advice, by the way, and I'm assuming you're trading a demo account. So let's do that, and then I would spread out my entries through here, stop loss above here, and yeah, I mean, see how we go with that. Now, look, if this rolls over here and leaves without me, I'm willing to let it go because I don't want to get involved down here, you know. And if we get up, if it trades back up into here, I'm interested. So, yeah, I mean, that's my take on the US 100. Now, if it doesn't, as I've said, if it doesn't trade back up into these levels, I'll let it go. Now, it's Monday, guys. It's Monday. Expect this to trade in the opposite direction to the weekly trend. In other words, they hit liquidity early in the week and then they trade it. Like if they're wanting to short it, they take out buy side liquidity, and then it's a red week. Now, if this trades south with a vengeance, be careful because they could be looking for stops under here to trade it back up again. I don't want to get complicated with this, but anyway, that's my entry point, guys, up in around here, and we'll see how we go with it. So with that, comment. I'd love to hear your thoughts on this. I hope you have a great day. Safe trading, and click the links below. We'll see you in the next one.